Hey everyone, welcome back to Mark Loeffler Experience. We got a great show here for you today. We're going to be talking about, is the stock market overpriced? And listen, I know usually I'm the one pontificating on the show and it's my opinion, yet we're going to go and we're going to dig deep and we're going to go listen to maybe the best investor of all time, if not the best investor, definitely the most consistent. Warren Buffett, he has it's called the Buffett indicator. I mean, so if you haven't really noticed what this is, it's basically the valuation of the total stock market, and then it's divided by the annual GDP of the US. And right now, as of August the 5th, which is it's last week, the market value of the US market stood at $54.6 trillion with a T. Annualized GDP in the States is 23.1 trillion. So you divide that and you get 237%. Basically, what this is telling us is that it is currently 90% above the historical average, which suggests that the market is strongly overvalued. Is it different this time? Obviously, interest rates are historical lows. They're pumping so much money into the economy. Where's that going? We have inflation. So, and I guess a lot of it is the GDP slowed down so much that that's current GDP not projected, and GDP is going up in the States by a fair amount, not as much as obviously the stock market is. It begs the question, should we be investing in the stock market right now? And if you guys follow Warren Buffett, or if you don't, basically he releases his stocks that he's bought every quarter and things that he sold. So what is Warren Buffett buying? What is he selling? So in the last quarter, so we're talking about end of March, which was released in May. So the latest quarter will be coming up probably next week, is when he has to do his 13F filings. Let me know if you guys want me to do a video on that. I'm trying to change it up a bit. And just actually, when I'm reading something online or when I'm checking something out and I think it's interesting to everybody, then that's what I'm trying to bring you guys. So what did he add? He added Verizon. He reduced USB, which is Bank Corp, by about 1%. General Motors, he reduced 7.5%. AbbVie by 10%. Chevron Corp, he sold 50% of his position in that. Bristol Myers Squibb, 7% he sold. Merck, so he's getting out of pharmaceuticals, or he's selling a big portion of that. He did add Kroger, which is obviously grocery store. He added 52.8% to his position. Marsh & McLennan, Aon, RH, which I don't know what that is. I'd have to look that up. I also reduced Exalta Coating Systems by 40%. Sirius Satellite by 12%. And obviously, he has sold a lot of his Wells Fargo shares, which he has owned for a heck of a long time. What does this tell us? Does his indicator and his moves really lead us to believe that Warren Buffett thinks that the stock market is overvalued? I mean, he's been talking about this for a long time. He has and is sitting on hundreds of billions of dollars. They're not able to find a home for that money at this time, because they feel the stock market's overvalued. One stock that they are buying in great quantity is their own stock, Berkshire Hathaway. They're buying back stock like you wouldn't believe. So how do we read this and how do we take advantage of something like this? Well, for somebody like me, I sell puts. I'm an options trader. I love to sell puts on things. I look at that and say, well, if Warren's adding a position to something like Verizon, he's definitely going to hold that long term. He's not going to be a seller in the marketplace that takes shares off the market. So typically that increases the price over time. Same thing with Berkshire Hathaway. They're literally taking shares off the market, and I can go ahead and sell puts knowing that there's going to be a buyer for those shares, or those shares are coming off the market. Therefore, in the case of Berkshire Hathaway, not so much Verizon, that the earnings per share is going to go up. Without doing anything, the earnings per share is going to go up. Verizon, I just know those shares aren't going to probably be sold until he sells it all. He doesn't really trim positions. He's either all in or all out typically, right? I'm a little leery of this market. Warren is 90% above the trend line. Who knows what Warren Buffett's rules are for stocks? Warren Buffett's 7 principles to investing are: do not follow the crowd, have fixed investment principles. So if you're on Reddit and you're reading something, just don't chase the herd. Do not put all your eggs in many baskets. Basically, he's saying put all your eggs in one basket and watch that basket very carefully. Do not rely on outside analysis. So if you're reading this, if you're watching this on YouTube, we'll put the link down to the Buffett Indicator. Do your own homework, everyone. I can't stress this enough. If you want to be invested in the market, you should learn about the market. Otherwise, lowest cost index funds, consistently bought over time, reinvesting the dividends. That's what I would do. Do not act on a hunch. Just because you feel it, great. Go ahead and do more research. I think this will be good. Well, why? If you can't explain it to me and give me a business plan, then don't do it. Do not place small amounts in each basket. So this is the principle of, if you're going to go big. Because if you're going to do this and you're going to have a winner, win big. And if you've done the homework and you've done the analysis and then you should be a long-term buyer. And do not watch the market intently. Here's the thing. I know people who watch it constantly and they get spooked. Whereas, I make my one trade a day. Sometimes I don't trade at any time. And that, for Warren, that'd be a heck of a lot of trading. For me, it's a lot less than I used to do. But I know people who constantly check their phones. They're always worrying about, it's up 1,000, it's down 1,000. It's up 100,000, it's down 100,000. I'm going to check it every once in a while. I'm pretty passive now with it, and it works better for my lifestyle. I'm not a day trader. I don't want to be a day trader. Anyways, back to it. So Buffett says, historical values are super high. So we're above where the internet bubble was. It was 67% above historical value. Bottom of the financial crash in 2009, it was 48% below historical value. So if you had bought during that time, obviously you were a genius. And that's when he was picking up deals. That's when he was picking up cigar butts and smoking the last bit of cigar. He was picking up full cigars back then. Unlit cigars, Cuban cigars, he was picking them up. We'll put that up. We'll put some of these figures up for you guys to have a look at. Comment down below. Let me know what you think. Obviously Warren Buffett's been around a long time. Is he right? Time will tell. Thanks, everyone. We'll see you next time.